Hey everyone, I am William Mansour and it is Tax Tip Tuesday. I hope you're all doing well out there. Quick reminder, tax business deadline, the extended deadline is next week, September 15th. So if you are due a business tax return, make sure you get that filed. As long as you're on extension, you won't face any penalties. Today's topic, I'd like to talk about something that I was asked by one of you, and it is about withdrawals from retirement accounts. So can you take withdrawals from retirement accounts early? Generally, you can't take a withdrawal out of your retirement account until you reach the age of 59 and a half. If you take it out early, you can be subject to some penalties. So if you take money out of your 401k or IRA, for example, you'd have to pay a 10% penalty. On top of that, your income tax, depending on whatever income tax rate you fall in for the year. There's a couple exceptions to avoid that 10% penalty. Can't get rid of the tax liability with these exceptions. You still have to pay income tax, but if they're for qualified higher expenses, allowed to take without a penalty in an IRA, not a 401k. If there's death of a participant, those withdrawals will be penalty free. If you take, if you're a first-time home buyer and you want to take $10,000 out for your home, you can do that in an IRA, not a 401k. Now, because of the coronavirus and the CARES Act, they waived the $10,000 penalty for distributions of up to $100,000 for a few people. For qualified individuals. You're a qualified individual if you were diagnosed with coronavirus, if your spouse was, if you're experiencing adverse financial consequences as a result of being quarantined, if you experience adverse financial consequences as a result of being unable to work due to lack of childcare, or you experience adverse financial consequences as a result of closing or reducing hours of a business that you own or operate. Those are some exceptions of money you can withdraw without facing a penalty. The other way to really have no tax consequences, no penalties, no income tax, is taking a loan from your 401k. If you're looking to maybe buy a home and you wanted to take money out without having to pay any taxes, you can take it out from your 401k in the form of a loan. That would avoid any penalty, that would avoid any taxes. Of course, you are going to have to pay a little interest and pay that back to your 401k over a certain amount of time, depending on what your 401k administrator allows. But that's another good option to avoid these penalties or taxes. There's a bunch that goes into this. I'd be happy to discuss it with you further if you'd like. Hopefully you found this helpful. If you have any questions or you'd like to further discuss this topic, please feel free to reach out. Again, everyone, I am William Mansour, and this has been your Tax Tip Tuesday.